When you think about the huge global equipment rental market, a couple of big names probably pop into your head. But what if one of the most compelling opportunities is a company you've maybe never even heard of? Today, we're going to take a look at Nishio Holdings. They're an absolute powerhouse in Japan, and they've got a really unique international strategy. So the big question we're digging into is this. Is this a hidden giant just waiting for global investors to find it?
All right, let's start with the numbers as of April 10th. So the stock's at 4,430 yen, which is a bit of a pullback from its recent high. But here's what really caught my eye. Look at that price-to-book ratio, 0.88. Now, for any investor, seeing a PB under 1 is a major signal. It could mean the company's stock is trading for less than the actual value of its assets. You combine that with a solid dividend yield of almost 3%, and you have to wonder, is this recent dip a genuine buying opportunity?
To figure that out, here's what we're going to do. First, we'll dive into just how big of a powerhouse they are in Japan and check out the solid financials that prove it. Then, we're going to look ahead at their next stage 2026 plan, and to put it all into perspective, we'll see how they stack up against the biggest rental company on the planet. And then, at the end, we'll pull all the pieces together to build a clear investment thesis.
Okay, first up, let's talk about their home turf. Because really, to get why Nishio has such global potential, you first have to understand just how deep their roots go all across Japan. So what is Nishio exactly? Well, at its core, it's a huge rental company, but it really has two different sides. On the one hand, you've got all the heavy-duty machinery, the stuff that literally builds Japan's infrastructure. And on the other, you've got this really dynamic side of the business that powers the country's biggest events and exhibitions. And this, right here, shows you that dual identity perfectly. On the left, that's the backbone of their business, the heavy iron that builds cities. But then on the right, you see their gear powering these huge cultural events. So they're not just some construction company. They're woven into the very fabric of Japan's economy and its social life.
And that kind of integration is only possible because of their incredible physical presence. We're talking about a massive network of over 440 locations. They've achieved true nationwide coverage. This isn't just about owning the equipment, it's about having it right where it needs to be, which absolutely solidifies their spot as a domestic market leader.
So let's move on to the financials and see how this all adds up to a strong foundation. I mean, a great story is one thing, but it has to be backed by solid numbers. And, well, Nishio definitely delivers here. First off, just look at this top-line growth. It's so consistent, from about 162 billion yen in 2021 to a forecast of almost 215 billion in 2025. This isn't some volatile up-and-down business. This chart paints a picture of steady, reliable demand and really good execution. It screams resilient and dependable business model. And that growth isn't just for show. It's actually profitable. Their return on equity is 8.9%. What that tells us is that for every single dollar of shareholder money they put into the business, the management is generating almost 9 cents in profit. That's a huge sign of a well-managed, financially sound company. Now let's take a peek at their balance sheet. An equity ratio of 46.6%. For a company that has to own so much expensive, heavy equipment, that is an incredibly strong number. It means they're not drowning in debt, they're funding themselves, which gives them a way lower risk profile and fantastic financial stability. And finally, for all you income-focused investors out there, check this out. A consistent dividend payout ratio of 30%. Management isn't just plowing everything back into growth, they are clearly committed to returning value directly to their shareholders, year in and year out. Okay, so we've established they're a stable leader with strong financials, but the big question is, where are they going from here? And that's where their medium-term plan, Next Stage 2026, comes into the picture. And here's the crucial part. They're looking way down the road. The president, Masashi Nishio, says it himself. They're investing now to get ready for demand they see coming years from now. This is proactive, long-term strategic thinking, not just reacting to the market.
So, how are they going to pull this off? Well, their plan has a few key pillars. At home, they're pouring money into technology, things like digital transformation, or DX, to make their operations even more efficient. They're putting their money where their mouth is with a massive 120 billion yen investment in new rental gear. But for me, the most exciting part is their international play. It's a mix of smart acquisitions and this really unique strategy they call trilateral cooperation.
So let's focus on this trilateral cooperation for a second, because this is their secret weapon. Instead of letting a super expensive piece of equipment sit idle in one country when things are slow, they strategically move it between Japan, Southeast Asia, and Australia. This lets them chase demand wherever it pops up, maximize the use of every single asset, and make their whole operation more efficient. It is a genuinely clever way to run a global business.
Now, to really appreciate Nishio's unique position in the market, it helps to put them up against the biggest player in the entire world, United Rentals. United Rentals is the undisputed king of the hill. They are enormous. They dominate North America and Europe, and they've built their whole business around providing these complete worksite performance solutions. They really are the benchmark for scale in this industry.
But when you put them side by side, Nishio's unique strategy becomes crystal clear. Look, they are not trying to be a smaller version of United Rentals. Their focus is on a very specific geographic region: Japan, Southeast Asia, and Australia. Their key strategy is all about that super efficient asset management with trilateral cooperation. And of course, they have that major events business that really sets them apart. They aren't the global leader, they're a regional powerhouse playing a totally different and smarter game.
Okay, let's wrap this all up. Let's bring all these different threads together into a single, cohesive investment thesis. What's the core story here for a potential investor?
It really boils down to these 4 things. 1, you've got this incredibly stable and dominant core business in Japan that's built on a rock-solid balance sheet. 2, you've got a clear, fully funded, and actionable plan for the future. 3, their global strategy isn't just a copycat approach, it's a unique and really intelligent model built for efficiency. And finally, number 4, you look at the valuation, especially that price-to-book ratio under 1, and it really suggests the market might not be fully appreciating the true value of their assets and their future growth story.
So what's the bottom line here? You have a domestic champion with rock-solid financials, a very smart plan for international growth, and a valuation that might be screaming undervalued. And all that leads to the final, crucial question that every investor should be asking themselves. Is Nishio Holdings the hidden value story in the global rental market?